So once again, greetings everyone. My name is Dmitry. I'm the trader, portfolio manager, and in Bitsgap we are basically working on the empowerment of your trading with the help of artificial intelligence implemented in automated trading. In simple words, crypto trading bots, profit maximization 24/7. And today's agenda will be, first of all, there are 4 new topics that will be discussed today. That's the 5 exit strategies from the market. So these are 5 exit options we've implemented, and I will demonstrate you all of these instruments and how and when you can use it. The second one is launching bots in advanced mode. So before, in previous webinars, I always demonstrated how to launch the bot in the simple and advanced mode, but it turns out that from the practical perspective, it is way more convenient and it makes more sense and saves a lot of time just to go straight to the advanced mode, as it only has some tiny differences compared with the simple mode, and it's always better to use something hard, and then unless you want to use the simple, okay, so just let's continue, and I will explain what I'm talking about a little bit later. And the third one is going to be one of the most frequently asked questions is there a difference in profit generation when you have a narrow and wide grid spacing? So I will show you some cases where having narrow setup can be beneficial compared with the wide setup, and the opposite cases where having a wide grid spacing can be beneficial. And the fourth topic is what makes a different investment change from the bot profit, what unites them. And basically these are 2 key metrics that you must be aware of and how to use them. We will also talk about risk-free demo trading, which you can use to discover your own trading strategies and to develop your trading styles. So that's basically an absolutely risk-free. As I already said, you have virtual money at your disposal to use as if you are trading on your real account. So that's basically a trading simulation, absolutely risk-free. And yeah, we will go through Bitsgap instruments like the trading up feature, stop loss, take profit, exit strategies that allow you to maximize your returns and to minimize your losses in case of a falling market. And most importantly, we will talk about the backtesting, how you can use it to find optimal cryptocurrencies to trade based on your risk appetite. So let's begin with the power of artificial intelligence. So what I mean by that is that using artificial intelligence in automated trading basically allowed us to develop a fully configured trading algorithm. So as of today, we have significantly empowered the so-called grid mechanism, which is basically the system plotting sell orders and buy orders within the defined trading range. And that requires you to have both the base currency. Well, in this example, you can see that Cardano is the base currency. I'm gonna use the laser pointer just to show you. And the quote currency is used to buy the base currency. So in this case, that's USDT. So clearly, each time the price triggers the buy limit order, the bot buys the base currency, in this case Cardano, and eventually it plots a new sell limit order. So you can consider the sell limit order as a take profit. So when you buy something, selling this asset later, it is the same as having a take profit on a chart. So just bear in mind that you can consider and you can perceive sell orders as if these are your take profits for all of the buy orders that were executed by the bot. So, and yeah, the term here, very important one, is the grid spacing. So the grid spacing is nothing more than just a gap. It's the distance between the orders. So you can have a narrow setup as the one you see on the chart right now, and you can have a wide setup. So I will show you some examples a bit later. So clearly having a narrow setup allows the bot to take advantage of the market swings, and having more grid levels, in this case all of the sell and buy orders, they are called grid levels because that's the grid algorithm. So that means having a narrow setup, you basically provide the bot with more trade opportunities, because it is more likely that the price will eventually trigger the order, compared with having a wide setup where you have your grid levels plotted far from each other. Well, I will show you some real cases just for you to spot the difference. And the second advantage, which comes from the artificial intelligence, is the high frequency trading. Basically, you see here's the example. That's my real trade, and actually it's still active on my account, so I will show you in 5 minutes. And this screenshot was made, I think, at the beginning of July. Yeah, because you see that the time elapsed since the launch is 34 days. So that's the bot that started trading from the beginning of June. And you see throughout this time it had managed to execute 7,099 trades. So within this 30-day period, 7,000 trades. Can you imagine manually executing that amount of trades? I doubt so. So that is why with artificial intelligence you now have this power to have a fully automated high frequency trading algorithm 24/7 without any need of monitoring the market constantly. So you can spend the rest of your day on other things more important to you rather than staying in front of the computer. Simply, the algorithm is here for you to generate constantly profits from the market. So to be precise, that's actually 202 trades per day. All right. So once again, ask yourself, can you execute that amount of trades per day? Well, I think the answer is quite obvious, that barely any of you can do this. So the third advantage of artificial intelligence that we've implemented in our automated trading is that you have the consistency. All right, consistent profit inflow. So regardless of the market trend, either the market is going upwards or it's in the sideways, in other words, stagnation, or maybe the market is falling, the bot will always find these opportunities to buy low and sell high. So the basic principle of the grid mechanism, the algorithm that we've implemented, is to buy low and sell high. That is why you see here it's the Ion trading to USD with the total investment of 600 and in total 47 grid levels plotted on a chart. So that's 47 limit orders, in other words. But for the sake of this example, I've plotted only I think that's 9 orders in total, because if I would have plotted 47 grid levels, it could be quite misleading and visually distracting. So just bear in mind that in reality there should be 47 orders plotted on the chart, but I'm just going to use a few of them. So you see the consistency here comes from the constant profit inflow. So each time the bot buys low, it sells high, and it generates profits. So added up together, these profits make up decent returns, all right, in a long-term perspective. So on average, well, if consider only my trades, on average, I see that the bot is capable of making around 200, well, sometimes up to 300% of return if annualized. So it can be 10% per month, it can be 20% per month. So that's up to your choice. I mean, what was the cryptocurrency you've chosen to trade, and what was the trading setup, how many grid levels you've plotted, are you using a trading up feature, stop loss, and some other instruments that we have. So regardless of either you have a wide trading setup, I mean having a lot of grid levels within the trading range, or you have a narrow setup where you have when you have a wide setup, that means that you have few grid levels, and then you have a narrow setup, that means that you have a lot of grid levels. In any case, you get the consistent profit inflow. It's just the question whether the price will trigger your orders or not. The fourth advantage is that trading algorithms, in this case our automated bots, they are emotionless, all right? And you might be familiar with the term behavioral finance, in which analysts, finance specialists, they study psychological aspects in trading and investment, and it turns out that decision making is very crucial, and sometimes we can be biased, we can be under the stress, which leads us to irrational behavior, which leads us to make our stop loss zone wider. So that means that we are now taking more risk due to the distress. So when it comes to automated trading, bots are fully emotionless. So they simply follow the plan. They simply buy low and sell high regardless of the market trend. So you will always get this consistent profit inflow, as the bot, bots, they never hesitate. They don't have this feeling. I mean, they don't have feelings, right? So they just follow the plan, and it's just the cold trading that many human intelligent traders are willing to achieve, is to become completely emotionless in trading. Why would you strive towards this if you can use the power of automated trading, which is already fully emotionless? So all is left for you to do is just to configure the trading setup, and to, from time to time, to monitor the market and to monitor the bot's activity. And yes, already mentioned, fully automated 24/7. So no days off, each day trading. So here's once again, just for you to refresh, what the algorithm is all about. Each time the price triggers the buy limit order, as you can clearly see over here, a new sell limit order is plotted on a chart, maintaining this grid spacing that you've configured. So that's basically the take profit for the buy limit that you've just executed. If the price then triggers the sell limit order, in this case the profit generated from this sell is used to plot a new buy limit order. So this is pretty much an endless algorithm as far as the price stays within the trading range, and options to manipulate the trading range are affordable, and in 10 minutes I will explain to you how you can manipulate the trading range, how you can let the trading range to follow the price appreciation in case if it breaches the upper limit price and goes higher. So there is a trading up feature to follow the price. So stay with me. We will cover all of these instruments today. So, and yeah, backtested strategies. Well, the power of backtesting is that you can always backtest the algorithm on the historic prices. So basically that's the simulation of the trading algorithm as if you would launch it back at some time in the past. So here you can see that if basic attention token is trading to USDT, then in this case your consistent profit inflow is going to be in USDT, and you can always backtest. All right, so you can always see what was the performance back then at some time. It can be 3 days ago. We have options to backtest on a weekly basis and on the monthly basis. So if you are satisfied with the backtest results, with the historic results of the algorithm on a selected cryptocurrency, then you can clearly make a comparison between different cryptocurrencies and how the bot managed to accumulate profits for you, and decide which one is optimal for you. And most importantly, some traders and investors using Bitsgap platform or willing to use, they have some feeling of hesitation regarding the funds control. So you and only you have a control over your funds, and that is why, that's because we have the API, which is application programming interface. So that means that you have a full access on, control over how you configure permissions. So from the main page you have the My Exchanges and New Exchanges, where you can add the account, your trading account. Let's say you are trading Binance, so you want to use Bitsgap as a platform to use automated trading and to use as a spot trading platform. So we need in this case your API keys, which is basically a set of rules which you allow the Bitsgap to run. So yeah, here comes the explanation how you add the API. But most importantly, on this slide, yes, this one, you see there are API restrictions. So you see that withdrawals are enabled. All right, so Bitsgap cannot withdraw or deposit from your balance. All right, so it only can read the data, so it can estimate what is the current value of your portfolio, what are the open orders on your exchange, and also enabling trading. Basically you allow to enable automated trading for you. So otherwise it wouldn't be possible for us to execute trades for you. So these are only two chat box. I'm sorry, these are just only two features, rules, and everything else you can restrict. So once again, withdrawals are not enabled, so you are the only one who has control over your funds. So that's why you shouldn't worry. And yeah, well, for some traders that's still quite convincing, and that is why I had to go through this one. And now let's start. Let's launch our first bot in the advanced mode. So what I'm gonna do, I'm gonna open the main page. It's already here, and you go to the bot section and you open the advanced. So to compare with the simple, in simple you don't have the backtest button, and you don't have an in-depth calculation of how your funds will be distributed based on a configured trading setup. So in the advanced mode you have everything you need. All right, so most importantly you have all of the features like take profit, stop loss, which you can switch on. You have backtesting, and now is the time to show you how to configure your first bot. So first of all, you can scroll down, and on the right side you can find recommended strategies. So these are recommended strategies based on the backtest results. All right, so these are these are top performers based on the bot profit return for the last month. So it turns out that Band was the top performer on Binance Exchange. Let me switch to my demo mode. Remember, the demo mode is a trading simulator, absolutely risk-free. So this is my virtual money. So let's check out what is going on, let's say you are trading at HitBTC. So if you click on HitBTC, it will have different recommendations. So for HitBTC, that's MITX 200 return for the last month. I can switch to Wick, and you see that in this case it will refresh and a new recommended strategies thread will be revealed. So that turns out that one trading to BTC was the top performer. So just based on this recommended strategies, you can already choose a list, some cryptocurrencies to trade. Let's say I want to return to my Binance exchange, and I'm gonna use ERD. You see now you have ERD selected. You have the trading range already automatically predefined for you by the system, but you can always make adjustments. So you can widen it up or you can narrow it down. You can squeeze your trading range like this. I'm just dragging the line. I'm just dragging the upper limit price in any direction I want, and I'm dragging the lower limit price in also any direction that I want. So notice that the wider is your sell zone, like this one, the more of the base currency you must have on your balance to initiate this trade. So, and you see the system already automatically estimates what is the amount. So that's exactly, if you want to allocate, in this case, let's plot $900. So it requires you to plot, to have 20,000 ERD on your account, simply because it needs ERD to plot all of the sell orders, right? And you must have almost 400 USDT to plot all of the buy limit orders, all right? So it almost looks like a 60 to 40% split. And if you make your sell zone narrow and you have, in this case now, a wider buy zone, notice that the distribution changes accordingly. So now you must have 600 USDT as a quote currency to initiate this bot. So that's now around 60%. You see? So that's how you can manipulate the trading range and how you can dislocate your investments. So you can always also manually adjust your lower and upper limit price like this, but it makes it way easier to just drag the line using the chart, which you can always zoom out and zoom in. So the cool thing is that you can have your bot configured on a chart where you have, let's say, a technical analysis. So you can open Bitsgap page, go to bots, you see the chart, you plot some technical analysis instruments, and then after you start your trading setup configuration based on the technical analysis. Technical analysis is basically used for you to determine the price at which you find as the optimal one to enter the market. So now we can configure the amount of grid levels distributed within this trading range. So now I have 41. Let's say if I want to have 100 grid levels. Notice that the more grid levels I'm willing to plot, the more investment allocation is required, because there are minimum requirements for each order coming from the exchange. So the Binance has a minimum order size of 10 USDT. So like that's the minimum. That is why plotting more grid levels requires you to have sufficiently more investments. So if I want to allocate 900 USDT with 100 grid levels, that would be impossible. But what I can do here, if let's say I still want to allocate 900, in this case I can adjust the grid quantity. So it will automatically reduce the amount to 48, and now I am able to launch the bot as I now have less grid levels within the trading range. Let's say I want to I'm confident to launch the bot with 100 of the grid levels. In this case, you see the system is telling me that I must have at least 1,800. So I must check on my balance if I have that amount of USD. It clearly is not enough. So I should, let's say 1,100, and I actually have that amount of USDT on my balance, which is currently available. I'll make some adjustments. So yeah, 58 grid levels. The spacing is 1%. So notice that the more grid levels you plot, the narrower is your grid spacing, and the less grid levels you have, the wider is your grid spacing. Let's plot 50 grid levels, and let's switch off all of the features of the instruments that I will explain later. Let's start the bot. If you click on, you see it requires to have 25,000 ERD. I go to my balance and I see that I don't have that amount of. In this case, the system will automatically recommend me to buy this amount of ERD. Notice that it already includes some amount which will be paid as a fee. So even though it displays 25,000, in reality it is more, because the fee that the exchange charges for each trade that you initiate, it charges a fee. So we have this fee priced in, and that is why you must have a little bit more. So that's the 27,000. You click on yes, buy, and now you see that the system will fill the market buy order, and your trade is now on. All of the orders are plotted on the chart. You can click on view button and to see the amount of open orders, at which price, and what is the amount it will sell and buy as soon as the price triggers each of the levels. On the left side, you see that I have a list of some active bots already trading, and notice that I have some bots with only 14 grid levels, with 30, and I have some maxed out grid levels. So that's the maximum that we can offer to you is 180. So that's what I call the high frequency trading. And you see I have the investment allocation amount, my trading range, which is defined by the high and low price, grid amount, transactions. So remember the example I demonstrated with land trading to BTC. So it was what, 7,000, yeah, and now it's almost 12,000 starting from the June. All right, so it's still trading for me because I'm pretty satisfied with the results. So I just stick to the algorithm and I just let the bot to make profits for me. And notice that I have only one bot currently in the negative zone. So here comes two key metrics, the investment change and the bot profit. Now let's come back to the presentation and let's see what defines these terms. So Yeah. So you see, in this example, I have BitTorrent trading to USDT with a total allocation of 400 USDT, 33 grid levels, and as of at the time I made this screenshot, the investment change was 12%. So that means that I'm up by 12% from my initial investment. The way I calculate my return is first option. You can take your investment allocation, which is over here, that's 399 USDT, and simply multiply it by the investment change. So that's multiplied by 1.12%, and this is now your current investment value. In this case, the profit is simply the difference between the current value and the initial investment value. So that's, we take 448 and subtract the initial value, and our pure profit in this case is 48.91 USDT if I click on close. What you have to understand here is that bot profit, in this case, that's 8.52%. That's the guaranteed profit. That's the profit the system has already generated for you, and you have it on your balance. This is the amount of profits that the bot has managed to generate throughout this period of time since the launch of the bot. So that's your fixed profit. Whereas you see the difference, 48 against 34. So the rest, $14, is the value change, all right, as the BTT is always either appreciating or depreciating. So right now, the market, at the time I made this screenshot, the market was moving upwards. So that means that the BTT that I had on my account was also appreciating, and thanks to that, now I have this profit of $48. But the fixed one, I mean the one which is already in my pocket, that's the bot profit. And the second calculation that you can use and is simply you take the open orders amount. So when you click on view over here, you see that you have some open orders. You have, in this case, I have base currency in open order, so that means that that's the amount currently frozen in sell limit orders, and that's the amount of USDT currently allocated in buy limit orders. But in this example, I have only the quote currency left. So what I mean here is that I take this amount and simply add the bot profit. So that's the same value I get if I use the first calculation, the same profit. So the thing that I'm trying to explain here is that bot profit is your fixed profit, so that's already in your pocket. Whereas the investment change can be different because the value of the base currency is constantly fluctuating as the price is moving either upwards or downwards. So if you click on close, that's the investment that you get. That's the profit total generated. Whereas 8% is already guaranteed. That's already on your pocket. So basically that's it that you have to understand. What makes it different? What makes investment change different from the bot profit? The bot profit is already priced in the investment change, and most importantly, fees are also priced in, so they are deducted, and that is why the profit that you see here is a net profit. That's the pure profit, net of all fees. Let's continue, and now is the time to discuss optimal scenarios to launch our bots. So basically, it's not a surprise that there are mainly two markets on which we can generate profits. It is then the market is rising and on the sideways market. The first one, it's the rising market, and clearly here the bot, as I already mentioned, regardless of the market direction, it keeps looking for the opportunities to buy low and to sell high. So on the rising market, It is not an exception. It will always find these circumstances on the market to buy low and sell high. So that's the bot profit generated on the rising market. Also, on the rising market, your base currency, in this example that's BNB, is also appreciating. So that's, in this case, is what I call the value change. And that is why, added up together, the value change, the positive value change as the market is moving upwards, and the bot profit, the profit generated by the bot on this rising market, is nothing more than just an active investment change. So that's what I also call an active hodler, because it makes more sense and it's certainly beneficial for you to let the bot to use your base currency to generate profits in the quote currency compared with passive hodling. And what I mean by passive hodling is just, let me show you. What I mean by what I mean by simple passive hodling is just you buy the asset and you wait for the price to appreciate in the future, all right? But in reality, it makes more sense and it's beneficial to let the bot to use this BNB because you bought it, all right, and you have it on your balance. So why would you let it to just simply lie in your portfolio, where you can let the bot to use your base currency to generate extra profits, the added value, which is in this case profit generated in Ethereum. So once again, it makes more sense to be an active hodler rather than the passive hodler. From my perspective, the best market scenario to launch the bot is when you have a sideways market, and when you and then later, after the sideways market, you see a consequent break through the upper limit price. In this case, it's resistance, and the market starts moving upwards. On the sideways market, the idea is to earn during the stagnation. Same idea. You let the bot buy low and sell high. The sideways market is basically when you are staying in the neutral zone. So the price is neither moving upwards nor downwards. It stays somewhere in between, you see, somewhere in the middle. So that means you have a zero return. If you enter the trade over here in the sideways market, let's say at that price, so that means that you are in the very middle, and as the price is bouncing off the support and then reverts from the resistance level, it's almost always stays in the neutral zone, all right? So using automated trading, you let the bot to generate profits on the sideways market. So once again, you let the bot to use your base currency to generate profits in Ethereum. So I will show you a real example how automation allows you to maximize your profits on the sideways market. So imagine that you are not familiar with automated trading and you know nothing about Bitsgap. Imagine that you just simply purchased the base currency at that price over here where you see the hodl, and you hodl it up to this current price. So in this case, your return would be only 5%. All right. Whereas with automation, your return would be 14% by that time. That's because you allow your bot to generate profits on every market swing during this sideways. So that's almost a triple effect. And I guess that the answer now is obvious, that automation is beneficial on the sideways market, and it significantly outperforms simple hodling strategy. All right. And now comes the topic frequently discussed. It's how to define what is the optimal grid configuration, narrow or wide. So here's the example. First of all, the narrow setup looks like this. In this case, that's icon trading to BTC. You see the spacing is 0.33%. whereas this is what I call a wide setup, where you have, in this case, that's grid spacing 3.12%. So now you see what makes it different, the narrow setup and a wide setup. So when you have a wide setup like this one, you have the buy order and sell order plotted on the chart. You can also agree with me that in this case, the sell order is nothing more than just a take profit, all right? That's the same. So, and the spacing in this example is 5%. Imagine the price starts moving downwards and it eventually triggers the buy order. So that means that you are now in the market, you've purchased the base currency, and now you are affected by the price swings. Imagine that later price moves upwards, but it never reaches the take profit. So that means that you didn't fix your profit, and eventually see that the price plummeted. So you are now in the negative investment change zone. Whereas when you have a narrow setup, you have more opportunities and you have more chances that the price will eventually trigger all of your take profit levels. In other words, sell limit orders. So let's go to this chart. No, actually, let's use the presentation. So here you have a 5% grid spacing. So it's basically a 5% return in this case. But you see, the potential was 5%. So the bot would have managed to generate just on this one trade 5%. But as the price didn't trigger, I mean, it hasn't reached the take profit, that means that you are basically out of the market. You haven't fixed your profit. Whereas when you have a narrow setup, it means that there are more chances that the bot will eventually sell the base currency that it purchased before. So that means that you will have a stable, consistent profit inflow. A tiny one, in this case that's 0.3%, but added up together makes up a decent profit, which can compete with this potential 5%, but it hasn't triggered. So when you have a wide setup, once again, that means that you have a bigger profit potential because the space between the buy order and the sell order is wide. That means that the take profit is huge, potential is huge. But you are risking that the price will not trigger the take profit. Whereas in the narrow setup, you have a small profit potential, but you have many of these potentials, right? And that means that you have more chances that all of these potentials will be triggered, and added up together, you get this pretty much the same take profit as if you would use a wide trading setup. So it depends on the volatility that the cryptocurrency has. So if you see that the cryptocurrency is moving like crazy, and you can estimate it by using simple instruments provided by the trading view. So let's say I take this lower low up to this higher high. So that's 42% price range, all right? It could be that you can plot your wide trading setup where you have, let's say, 3% of the grid spacing, 5%. So it's most likely that the price will trigger these levels. Whereas notice that over here at this scale, let's take this lower low. Okay, I'll take this one, lower low, and higher high. That's 16% potential. And imagine that you have your grid spacing, let's say 17%. So that means that it will most likely won't trigger the price. I mean, won't trigger the level. So it makes more sense to have a narrow setup over here. But you never know what will be the volatility in the future, right? So that's always up to you to decide if you are willing to risk profit potential. So that means that you choose a wide trading setup, having less grid levels, or you are willing to sacrifice some profit potential, but you want to make sure that the bot will generate consistent profit inflow for you. That means in this case, having more grid levels, you provide the bot with more opportunities to seize these market swings, to generate these small fractionate profits, which added up together bring you decent returns in any case. And let's come back to the presentation. And now is the time to discuss the instruments that allow you to boost your performance, to boost your profits, to maximize your return, and what are the features that we have to secure your profits. So we will start with the trading up feature. The trading up feature, that's the one that you saw here, that's over here, that's this one. And the trading up is basically the feature that allows the trading range, which is defined by the lower and upper limit prices, to follow the price appreciation. So over here you see the example. As the price starts to move upwards, it breaches the upper limit price and now establishes a new higher high. In this case, if you have your trading up feature on, like this, so that means that the trading range will now readjust accordingly, so it will follow the price and it will now establish a new trading range. So that means that you are in the market following the price appreciation. So that means you are not skipping these trade opportunities, which you would otherwise skip if you wouldn't have your trading up feature on. Imagine that later again it establishes new higher high, so with a trading up feature on, it will follow the price. But what you have to understand here is that if the price eventually breaches the lower limit price, so it's now below the trading range, the trading range in this case will not, once again, it will not follow the price depreciation. So there won't be any trading in this zone. Whereas if the price eventually comes back to the trading range, which is now over here, you see it will continue trading. And imagine that eventually it establishes a new higher high. Yes, it will again readjust, reallocate accordingly. So now you have your trading range over here. So remember, at the very start of this example, we had our trading range over here, and now it's up here. So that means that we let the bot to follow the price appreciation to generate consistent profit inflow for us in the quote currency. Here's just an example with NG trading to BTC. That's a real example from my account. In this case, I had my trading up feature on, which is defined by this T letter over here. So that means that I have my trading up feature on. The trading range initially was defined by this zone, but as the price consequently breached the upper limit price, it made a breakthrough. You see that the trading up is now, the trading range is now over here, because with the trading up feature, it has been following the price all of this time. So these are all of the trades that it managed to make as the price was moving upwards and the trading range was reallocating accordingly. Otherwise, you would skip this profit potential if you wouldn't have your trading up feature on. And now example without a trading up. So I didn't switch my trading up on. So you see, the price started to move upwards as I predicted, and it made some profits for me. But as it breached the upper limit price, you see, I'm now out of the game. So I skipped this profit potential just because I didn't have my trading up feature on. So it's up to you to decide if you want to use the trading up feature or not, because it can be it can be that you are that addicted to, not addicted, but how to say, you want to take the maximum effect from automated trading. So that means that you are constantly monitoring the market. So you prefer to exit the active bot when you see, when you predict that the price will fall. So at the very high price, you would have closed the bot to reopen it at the lower price over here, just because you wanted to avoid this short-term fall. All right, but some traders, and it makes more sense to let the bot to trade for you, because regardless of the market trend and regardless of the short-term falls, it will generate profits for you. So it's up to you. If you have a lot of time and if you prefer manual trading, and if you want to take advantage of automated trading combined with your manual trading, then it really makes sense for you not to use a trading up feature, and instead to constantly monitor the market and close the bot each time you see that the market is now overbought, and it's most likely, according to your analysis, it will fall, so that you will later reopen the bot, so that you basically avoid this fall. But in reality, many traders, especially those that are entering the cryptocurrency market, they don't have that amount of experience and time. So using trading up feature, you let the bot to constantly stay in the market and to follow the price appreciation, so it will make profits even on the short-term falls and upside momentums. So that's from the experience perspective, the question whether or not you should use the trading up feature on or not. So another one to boost your and secure your profits is that bot profit offsets negative value change. So here comes the example. That's quantum trading to USDT, and you see, if you would buy at this price the quantum, and you would hodl it down to current price, well, at the time the screenshot was made, so you would be down by minus 6.88%. That's without automation, all right? But with automation, you see, as the market was falling, the bot managed to find those opportunities on the market to buy low and sell high to generate this constant profit inflow. So it has managed to generate 2.33%, which is used to offset the overall value change. So instead of having minus 6.88%, with automation, you have only minus 3%. So that's almost twice less, all right? So that's what we call a built-in security mechanism. That's as a result of the algorithm, which is constantly buying low and selling high. So that is why using automation on a falling market, you significantly reduce your losses, all right? So that's the security effect. So yeah, sources of trade ideas. Remember the recommended strategies that I've just demonstrated to you based on the backtest results, all right? Based on the past performance of selected cryptocurrencies. And now comes the backtesting, which allows you to estimate the volatility, risk, value change, and the bot profit based on historic prices. So here comes the example. You see, when I click on show backtesting results over here, that's what I get, but now I will come back to the presentation. And here's the NG coin trading to Bitcoin. You see that the time scale selected was from the 11th of April until the 11th of May. So that's exactly 30 days. And throughout this period, if you would launch the bot back at that time and you would leave it active until the 11th of May, the bot would have managed to generate 34% in the quote currency, in BTC in this case. So from that inception point, the price appreciation potential was 66%. So that was the 11th of April, and the highest high in this case was up to 66%, with a consequent dropped down to, you see, minus 34%. So in this case, that's what I call the profit potential in the value change, and that's what I call the risk, and it's minus 34%. Another example is BNB trading to BUSD, which is the stable coin. You see the same period selected, that's from the 11th of April until the 11th of May, but in this case the profit generated by the bot is slightly lower, that's only 30%, and the price potential upside momentum potential was 35%, and the risk was minus 23%. So basically, just to make it visually better to understand, so you say that comparing bot profits, NG significantly outperformed BNB in this case, all right? But from the risk perspective, it turns out that the value change risk was higher if you would have chosen NG coin. It's higher by almost 11%. So ask yourself, if you are ready to take a higher risk for a higher return, then in this case NG could be an option, could be your choice to trade, all right, just based on the historic volatility, bot profit potential, and other metrics. Whereas if you are risk averse, you are quite conservative when it comes to trading or investing, then in this case BNB could be an option for you, because even though it has demonstrated a lower bot profit return, but in terms of risk it has a lower risk, all right? So if you are managing somebody else's money, then in this case maybe you have some limitations regarding the risk levels, so it could be that BNB is an option for your strategy in this case, even though the profit is lower, but still consistency is what traders and investors are looking for, and in any case annualized you can get decent returns, you see. So for NG that would be 400, and for BNB that would be almost 200. These are all decent returns in any case, and you can diversify your portfolio with both of these active bots in your account. So yes, we are working on automation, constantly taking advantage of the artificial intelligence and implementing new features to empower you guys, to let you boost your trading performance. And the feature that we have implemented, which really makes us to stand out, makes us unique, is that we have this optimization to avoid almost all of the extreme pump and dump scenarios happening on the market. So stay with me. You see on the left side, that's the picture without optimization. And without optimization, your bot configuration would simply follow the price, follow the pump appreciation, and it would execute the vast majority of buy limit orders at the very high price. So that's something that we want to avoid. We are looking for opportunities to buy low, and in this case we are actually buying high. So that's something that we want to avoid, because eventually you see the price drop down, and that means that everything that we've purchased at that highest price is now in the negative value change. Whereas we have this optimization to avoid extreme pump and dump scenarios. So in this case, the algorithm avoids this pump so that you have a consistent profit inflow. So that's the way of that's like the feature amongst other, how we secure your trading. And that's a built-in algorithm that really makes Bitsgap unique. Now let's come back to the main page, and let's go through some other features. So I've mentioned that we will also discuss exit strategies. So you see you have a list of active bots, and I have icon trading to BTC, which is now in the negative zone. So investment change is negative because the price is now falling, even though I have some bot profit generated over here, but it's still, this profit is not enough to offset the negative value change. That is why I'm minus 2%. If I click on close, you see that I have now 3 options. The first one, that's the ordinary one, which is to cancel all open orders. So that means that you will close the bot and you will close all of the open orders, because it could be that, let me click on view, you see there are active orders over here. So you have active sell orders, and that means that your base currency is currently allocated to all of these sell orders, and you have active buy limit orders. Your BTC is allocated to these buy limit orders. So when you click on close all open orders, the system will automatically cancel out all of the open buy limit orders and sell limit orders. So that means that what is left in the bot, in this case, that's exactly 1,700 icons, and that amount of bitcoins, you will find this amount in your balance right after you click on close. Other options, another one is to sell at the market price. So it will sell this total amount of the base currency that is currently got stuck in your sell limit orders by the current market price. So that's pretty much a full exit from the market. So if you are no longer willing to have this active bot, and most importantly, you don't want to be affected by the price change of icon, you should choose this option. That's the complete exit from the market. So you will no longer possess any base currency. So that means you won't be affected by any price change of this cryptocurrency. And the third option, that's the brand new feature we've added a month ago. That's the break-even price. So it places sell limit order at a break-even price. So what the break-even price is a price at which you will exit the market with a 0 investment change. So you see right now it's minus 2.21%, but I don't want to lock in this loss. I don't want to take this loss. So if I choose to close at a break-even price, it will wait until the market reaches this break-even price, at which selling what is left, I will exit the market with a 0 investment change. So you see that it is defined as 3964, the break-even price for Icon. And let's see at which price is Icon trading right now. You see it's currently trading at where is it? It is currently trading at 3374, and the break-even price was 3964. So if I plot this on the chart, 3964, where is it? 3964. Alright, I guess I'm wrong. Let me check once again. Close. No, actually I'm right. 3964. Yeah, so you see that's the price that it must reach in order to exit the market with a 0 investment change. And at this price it will plot a sell limit order to your to allocate what is left, all of the base currency that is left. Same with ERD trading to USDT that we've just opened 35 minutes ago. If I click on close, you see the break-even price is 25,354. Once again, $25. You see, so that's over here. So the break even in this case, the price must reach this level so that I get a 0 investment change. So it's kind of neutral market exit. Other options to exit the market, they include the stop loss. That's the ordinary and traditional risk management instrument. It plots the order on a chart, and if the price eventually moves, let me change the color to make it visual, because otherwise it's not transparent. Yeah, the yellow one. So in case if the price starts moving downwards, once again, for some reason it's lagging. So if the price starts moving downwards and eventually it breaches the lower limit price, so it goes below the trading range and then consequently triggers the sell limit order. So that means that at that price, the bot will sell all of the base currency which is stuck in my active bot. So that's my full exit at that point. Because you see, what can happen later is that it can plunge even further down. So that means that without a stop loss order, I would bear even higher losses in this case. So my loss would be bigger. And I can adjust this stop loss in any direction I want. Well, almost in any direction. It is designed in a way that you can only plot it below the trading range. And most importantly, those asking how stop loss acts with a trading up feature on. So remember, the trading up feature is all about following the price appreciation. So that means that my trading range will reallocate accordingly, and the same happens, and it applies to the stop loss. The stop loss will follow the trading range. So when you have a trading up feature on with the stop loss will follow the configuration. All right. So let's say you've started over here. Now the price is trading somewhere higher. So that means that your trading range is now over here, and that means that your stop loss is also higher. So that by that we fully secure your, first of all, profit generated, all right, and secure your unreasonable losses. And other options is like the fifth one is a take profit. So when you plot, I mean, you select the take profit. Let's say I want to have 10%. So imagine that when ERD, trading to USDT, active bot, reaches 10% of the investment change, having my take profit instrument on, the bot will automatically sell all of the base currency, so it will cancel out. If I plot, if I choose 7%, if it reaches 7%, the bot will close automatically and it will sell all of the base currency. So by that I can ensure concrete take profit targets. So let's say if you set a 15% of investment change target, you can set it over here. But I'd rather, from my humble opinion, stick to the plan without using a take profit, because the idea of automation is to generate consistent profits for you regardless of the market trend. So if you are pretty much convenient that the overall, in the long-term perspective, the Bitcoin and Ethereum, my third best one is BNB, and the fourth of my choice is 0x, that they will altogether appreciate in the long term, then automation is what you're looking for. All right. So you basically let the bot to use your currency, which is lying in your portfolio, to accumulate extra profits, to generate added value in the quote currency. So let's say I have 0x and I want to use it to generate profits in Bitcoin. So I will open 0x BTC. So by that, I will ensure that the bot will use my 0x to generate BTC. And imagine in the long term, both 0x and BTC, they appreciate. So that means that I will have even higher returns because the bot has managed to accumulate the asset that eventually appreciated in its value. All right. So that's what we call the profit maximization. And that's what many traders and investors are looking for. They are looking for automation and optimal instruments to boost trading performance, and most importantly to secure your investments. And with features like stop loss, built-in algorithm to avoid extreme pumps and dumps, and the way bot profit offsets the negative value change in case if the base currency value is depreciating, are the features that you have at your disposal to secure your trading and to make sure that you generate decent returns. All right, so here's my real account. I mean, one of my real accounts. So simply click on the avatar here, switch off the demo mode, and you will open your real account trading. So here I have 3 active bots as of today. That's my BNB, that's basic attention token and Ethereum, and I also have some 0x at my disposal. So I let the bot to use my BNB, basic attention token and Ethereum to generate consistent profit inflow. All right. So these profits generated, they are already guaranteed. They are already in my pocket, and that's exactly what I'm looking for. I'm looking for the algorithm to generate consistently profits for me, so that I wouldn't have to spend hours in front of the computer plotting, executing all of the take profit levels, and always allocating stop loss and take profit. So I have a plan. You see, the algorithm, it follows a strict plan. It has a grid spacing which it maintains, and it has, if I click on stop loss, I will have a stop loss in this case, which will also follow the trading range in case if I have a trading up feature on. So I have everything here to take from the market consistent profit inflow. I am confident, and well, actually that shouldn't bother you. That doesn't matter. What is my opinion regarding the future price of Bitcoin and Ethereum? It doesn't matter. All right. But for those of you who really believe that the price, and that's from the mathematical logic, makes sense that Bitcoin eventually will appreciate. Right now you have this opportunity to let the bot to generate profits consistently. All right. So, and maybe I should show you some tips and tricks regarding the technical analysis and how I use the technical analysis to find those optimal market entries and exit. So what I've noticed is that quite many cryptocurrencies, especially those trading in the top 20, they do respect support and resistance levels, and that's basically all that you need. All right, guys. So when you plot support levels like the one you see on the chart right now, you see it has respected these support levels. So each time it approached the support level, the price eventually bounced off. Approached, you see over here, bounce off, bounce off, bounce off. So it respects levels. All right. It doesn't mean that past results they guarantee that in the future it will constantly respect the support level. No, but you see that the trading basically and technical analysis is all about statistical analysis. All right. So when you find those strategies that from the statistical perspective are successful, all right, then just follow them. All right, and make sure that you follow them with some risk management principles like stop loss. So in case if the strategy does not sustain, and in my case, let's say it breaches the support level, make sure that you have a stop loss to to have a limited loss in this case. All right. So you have all of the instruments at your disposal, and the way you can use your technical analysis is up to you, because some are using indicators, some are using support and resistance levels, some are using price action instruments, and many other. All right, so that's up to you. And yeah, so in this webinar I'm just trying to show you and to empower you with all of the features that we have to let you guys boost your trading performance. And I also share my experience, the way I use the technical analysis and the way I use active bots. All right, so when I see, let's say, the cryptocurrency is quite volatile, then I will most likely have my trading range defined by a wide setup. I will have a wide upper limit price, low limit price, and let's say I expect the price to appreciate significantly from that point right now. So I'm quite confident that it will not fall drastically. So in this case, I will make a narrow buy limit zone, whereas I will have a wide sell zone. All right. So that's the trading setup with a wide sell zone. If you expect the price to start moving upwards, in this case, to continue moving upwards. Whereas if you think that the market will enter the sideways market, then you can define your trading range by the support and resistance level. Let's say you are pretty much confident that the bottom line, the support level, is going to be over here, defined by this lower low. And let's say you assume that in this case resistance is going to be defined by the previous historic higher high price, which unfortunately, due to lags on my computer, yeah, well, let's say you see that over here looks like a decent resistance level. So let's assume that you expect the market to enter the sideways market and to bounce off the support and then eventually resistance level. Then this is going to be your trading setup. You see? Like this. So it's up to you, all right? It depends on your technical analysis. It depends on the fundamental analysis and the way you... yeah, it depends on your risk appetite, all right? Once again, you have backtesting here. And you can select the date range. Let's say I'm interested in how the BNB managed to accumulate profits, how the bot managed to accumulate profits on this cryptocurrency from the 1st of July until the 29th of July. I click on save, and here comes the result. Yeah, that's 22%. But I can also change it, all right? I can have, let's say, 100 of the grid levels. And once again, I click on it, and it will backtest this cryptocurrency having 100 grid levels, and you see different result. And the last example I will show you, that's, I think, ERD trading to USDT. That's the perfect one. So with 10 grid levels, show backtest results, you would have generated 100. No, actually, let's use the demo mode because I have more options there. And let's select ERD trading to BTC. So you say I will plot 10. No, actually, let's plot 15 grid levels and backtest this. So the bot would bring 100% of return, whereas if I plot 140 grid levels, what would be the result in this case? So you see, have I plotted more grid levels for the same period, I would have generated by, in this case, 13% more of the return. So you see, that's again the question, whether or not you should stick to a wide setup where you have few grid levels. In this case, I had 12 grid levels, comparing with a narrow setup where you have 100 grid levels, like in this one. So you see the difference is quite obvious. That's a 13% profit difference. But it's something individual, all right? It varies with the cryptocurrency. It always depends on the volatility. It can be that having plotted few only grid levels, you can generate higher returns because the volatility has managed to trigger your grid levels, even though the grid spacing between them is quite long. So whereas it can be that having a narrow setup where you have a lot of grid levels, and between these grid levels you have a very short distance, it can be that with this setup you can generate more profits comparing with a wide trading setup. So it's up to you. And using demo mode where you have virtual money, you can experiment, all right? So that's why we have implemented this feature. You can use it to find your optimal trading configurations that suit you the most, which satisfy your risk appetite in this case. And you see, yeah, for some reason it's lagging. Let me refresh the page. You see, I have quite many active bots in my demo mode account, and I treat them the same as if I used my real money. And you see that only one active bot is now in the negative zone, whereas the rest are in the positive. So they actually bring me returns, even though these returns are calculated in the virtual money, but still, all right, that's the performance, all right? So treat your demo mode as if you would use your real money, and I can guarantee you that this will significantly empower you, sharpen your trading skills, and boost your trading performance. So take advantage on all of the features that we have here. And yeah, I think that's this, like, what you got today during this webinar is everything you need to start trading right now, to start using, to start practicing. No rush. You have this demo mode to start trading, to practice before using your real money. That's the principle of risk-free trading simulation. And watch our previous webcast, which you will find on the YouTube channel, to refresh some other insights and tips and clues that I've shared with you on previous webcasts. And yeah, thanks a lot for your attention. Let's see if there are any interesting questions in the chat. Well, there's a question. A correct time to exit the bot would be when the bot is above the initial entry. Well, you see, the optimal scenario to exit the market is when you have your investment change in the positive zone. So you see, Lend trading to USDT is now plus 16%. So that's the return, all right, which I can already fix if I click on close. Whereas it doesn't mean that I am below or above the entry price. It can be that the bot profit has managed to offset the negative value change, and it can be that actually I think I have some examples where my investment change is positive even though the price is now below the entry, all right? And that's just because the bot profit has managed to offset the negative value change. And that doesn't mean that you should exit the market. It depends on your expectations, whether or not you expect the price to bounce off eventually, and so on. I think the case here was with Lend. No, I think. Yeah, let me check. Maybe let's LRC trading to USDT. Actually, that's a very good point, and during the next webinar I will show you this example. where you have current price trading below the entry point of your active bot, and despite that the current price is lower, despite that you can still be in a positive investment change zone. And I will show you this example. It's just that I cannot find it right now. It takes time, and I just don't want to waste your time. I will prepare for the next webinar and I will show you this case. So thanks, Oscar, for this question. Thanks a lot. I will provide you with examples during the next webinar. So yeah, follow the Bitsgap so that next Thursday you will get this answer, an in-depth answer. So yeah, it's been half an hour since we've started the webinar, and it's about time to actually finish it. And once again, I want to thank all of you for your time, for your dedication, and I appreciate your comments. I really appreciate your feedback. It allows me to develop, to improve my webinars, to improve the quality of the information that I am providing you with. So the more active you are, the better and the more useful information you will get each time you attend the webinar or each time you visit YouTube channel, where you can now see that we are started producing short videos which can be useful for you. And if you have some questions left, you can use the chat over here that you have on the main page, and you can also go and visit the Telegram chat that we have, the community of traders and investors. Very friendly, and yeah, will always provide you with their experience, their ideas. So use it to exchange your thoughts, your knowledge, because only together, guys, only together, combining our efforts, we can constantly develop better trading solutions to beat the cryptocurrency market, to beat the market in a way that we get more profits. All right, so yeah, thanks again, stay safe. I wish you profitable trading. See you next Thursday. Bye.